Hey, what's up, guys? Crypto Clay here, and today we're going to be talking about the Federal Reserve and what that is doing with the cryptocurrency market right now. This week, there was a meeting held between the Federal Reserve Chair, Jerome Powell, and the press, and they were basically just talking about what the Federal Reserve is planning on doing over the course of the next year, like what their plans are for monetary policy here in the United States. And that plays a direct role on what we're seeing happening right now in the cryptocurrency market. Previously, the chair, Jerome Powell, said that inflation is transitory, and he recently has recanted that statement with the actions that are being portrayed this week. So we're going to talk a little bit about that. We're going to talk about the impact that it's having on the cryptocurrency market and what we could see happen over the course of the next year with crypto. Unfortunately, if you came here to hear about all the good things in crypto, I have some bad news for you. The Federal Reserve is planning on raising interest rates in 2022, which could make speculative assets like cryptocurrency move down in value. Also, the same thing could be said for risky stocks and things of that nature. Speculative assets are always going to diminish a little bit as interest rates rise. So let's talk a little bit more about that. This article that I'm showing you guys here is on Market Watch. It says crypto investors are closely watching this week's Federal Reserve meeting, with the market expecting the central bank to announce a faster reduction in its pace of bond buying as U.S. inflation rises. Facing macroeconomic uncertainties, Bitcoin has fallen more than 30% from its all-time high of $68,991 in November, recently trading at $47,565. Ether is down more than 20% from its record high of $4,865, recently trading at $3,834. With the Federal Reserve expected to accelerate the speed at which it tapers its bonding buying program and signal faster rate hikes next year, crypto prices are likely to suffer further turmoil in the months ahead. Jesse Cohen, senior analyst at investing.com. What the Federal Reserve has been doing during this time of uncertainty and throughout the pandemic is purchasing bonds from the U.S. government to help the economy along. They're doing everything in their power to make sure that we continue on with economic growth throughout the pandemic. So they've been pumping money into the market themselves, trying to boost the economy. And in doing that, they've printed trillions of dollars, which has raised inflation. Well, with that, they've had to lower interest rates in order to get people to go out and get loans. Now, those two things are not tied directly to one another, but they definitely have a correlation. So with the Federal Reserve lowering interest rates on a macro level, it definitely also, in turn, lowers interest rates on mortgages. And the Federal Reserve has actually been buying these mortgage-backed securities. So those things definitely go hand in hand. Now, the Federal Reserve is hinting at raising the interest rates next year, which cause speculative assets like crypto to go down. This is a article that I found on CNN Business. It says America's inflation spikes have prompted the Federal Reserve to pick up the pace in normalizing its pandemic-era monetary policy. On Wednesday, the central bank said it will wrap up its stimulus program faster than originally announced, and its updated economic projections show multiple interest rate increases in 2022. The central bank, which first announced in November that it was tapering its monthly asset purchases, said Wednesday that it will do so at a quicker pace. Basically, what that's saying is they're going to stop buying all these bonds that they have at a quicker rate. They're going to slow down on their purchases throughout this stimulus program, and they're going to wind that down a lot quicker. And in doing so, they're eventually going to start raising interest rates. They think that by doing this, it will lower inflation. And it probably will. But the problem with that is things that have done the best during this uncertainty have been speculative assets because they're trying to fight against inflation. Things like Bitcoin and cryptocurrencies do exactly that. They're basically not pegged to anything as far as fiat goes. They are a speculative asset that is built to fight against inflation. In fact, Bitcoin was built after the 2008 housing market collapse to fight exactly that, inflation. We had the Great Recession after the housing market collapse, and that's when Satoshi Nakamoto decided to build Bitcoin to fight against the United States government's dollar and the inflation that was caused after the government basically brought it upon themselves. The housing market collapse could have easily been avoided, but we chose to be greedy. The banks and the people in Congress decided to be greedy. And that's exactly what caused the 2008 housing market collapse. Satoshi Nakamoto came along, created Bitcoin to fight against inflation. And that's exactly what it's doing, especially in times of uncertainty like this. But what we're seeing now is inflation is high, but it might not always be that way because the Federal Reserve is taking monetary policy steps to lower that inflation, raise interest rates, and taper off their spending, essentially, to bring the market back to where it should be. And in doing so, speculative assets are probably going to take a downturn. Now, this is not financial advice. I'm not saying go out and sell all of your cryptocurrency assets. That's not at all what I'm saying. In the long run, cryptocurrencies, I believe, are going to play a vital role in worldwide economics. It's not just going to be the United States. It's going to have a worldwide impact, and we're already starting to see that in some third world countries. Eventually, that will happen in first world countries. But with this policy that they're putting in place, raising interest rates, short term, over the next year, and I consider the next year short term, we might see a downturn in the cryptocurrency market. Now, that's not to say that anything can happen in the cryptocurrency space. We've seen that absolutely anything can happen with crypto. But short term, I believe that the cryptocurrency market is going to take a downturn, and that's if interest rates actually rise. So if interest rates stay low, speculative assets like crypto will probably stay high. If interest rates rise, then speculative assets like crypto will probably take a downturn. Again, that's just short term. I am very bullish on crypto as a whole, long term. In the next 5 to 10 years, I think we're going to see so much innovation in decentralized finance and the metaverse and NFTs. There are so many ways that NFTs can be used, and we've barely even scratched the surface. Right now, we're just talking about artwork whenever we talk about NFTs. But you can literally use NFTs to open a safe. You can use NFTs to start your car. You can use NFTs to do absolutely anything. make sales. NFTs can be utilized in so many different ways that we haven't even touched yet. So this market has a long way to go. Anybody that says that we've reached the top and we're not going to be going any further, I think is absolutely wrong. That's what I wanted to talk about today, the Federal Reserve and the impact that it's playing on the cryptocurrency market. Thanks for tuning in, guys. If you have not hit the subscribe button on my channel and you want to hear more about cryptocurrency news, please hit that subscribe button. If you enjoyed today's video, please hit that like button. But that's going to be it for today's video. Thanks, guys. Crypto Clay out.